Hi everyone, I'm Bagadon at Stock Market Caddy, and it is a Saturday evening at about 10 p.m., 10:30, September 10th, and we'll be doing a very detailed weekly update video for all of our members, both monthly and annual members tomorrow. The video they'll get tomorrow night will probably be over an hour. But and we look when we do those nightly videos for our members, we're looking at primarily our algos as they interpret and give us the signals that we need to see on a intraday basis, daily basis, and even a weekly and a monthly basis, not just on futures, but on the ETFs and on stocks for our swing traders and option traders and all of that. But this is a chart, a Renko chart on the S&P that we have made videos of before, and much of this is all being mapped out algorithmically, right, by our machines. And I want to show you something that has my instincts telling me we could be facing something pretty significant. I could be wrong, but first thing is, this is the high established earlier this year, up around 46.39, and the obvious high point. Here is the obvious low point, and this is going back into that early June period. By the way, these little red lines, these are swing point highs being mapped out automatically by our machine. I don't draw those, the machine does that. And these are support levels, swing support levels. And one thing that we know, as all of us, trained with, our standard, technical analysis, that when you break through resistance, former resistance becomes support. And when you break through support, former support becomes resistance. So you've got to kind of keep paying attention to where we are on the field. We also have these little green dots. These are swing points, and you might think of them as, for the real active trader, buy signals. And they've done very well here over all of this year, and these are the little sell signals as well, little sell signals. We also have some Fibonacci's mapped out, which I'm going to show you in a moment. And then also, if you can see here, we actually have a strategy that's running in the background. And you might want to know, what has that strategy done for this year? And let's just go and take a look here how far back we have this. Stay with me a moment. So we are taking this back to, let's go back. Yeah, we'll keep it right at about March 1, right? So, because this is a tick chart, 17 point to a Renko. By the way, how did we determine to use 17 points? The reason why we're using 17 points is we have an algo that tells us what size the bricks need to be if we want to mimic, which is what we want to do here, a daily view. So this strategy, since March, if a person had taken every single signal, every single one, and didn't take it early, didn't scalp it, this is pretty much the view. This is pretty much what you would have in your pocket. A total of only 22 trades, 50% profitable, and a pretty good return. Now, how and why is that? It is a trend following strategy. And prior to the most recent downturn that we had, which was this one, we were in this real strong up move, right? Real strong. And it was in this move that people thought, hey, we're going back up to the highs. And we were telling everybody, when we get up here, this is when we first mapped out the Fibonacci and said, realistically, when we get up to about 42.67 in this area, we're going to be looking for our C points down and a revisit to broken resistance levels. And we thought that we could come rapidly down as we did and probably find some support in around here where we had broken through, particularly right here where we had broken through resistance and it found support. And that's exactly what it appears to have done. And you can see over the last few days now, and our machinery has given us a long here, and we have a C point long, and everyone is all bulled up, and we're off to the races, and we're going to go back up to the highs and what have you. I'm not so sure about that. I think we're actually very much in the middle of this river. I still think that this was a very, very strong move down. As you can see down here, this is our GPS distant momentum indicator. And the market spent just about all of this time, months, in negative momentum. We had a few shallow bounces with some momentum, but look at the momentum we had when we went up the last time. Quite a bit. I don't see that momentum here. I know it was sharp, I know it was abrupt, but I don't see it reflected here. Now, it could build over the next few weeks, and it would be a gift if we could get back up here and not have as much momentum as we had when we were there the last time. It would be a gift from the trading gods. But I don't think we're going to make it, folks. I don't think so. I'm looking at this, and I'm going to draw this out kind of broadly here. So bear with me. This is going to be freehand, and let me do this in red. Okay, so this was the obvious high, and I'm just going to kind of blow us down to the obvious low here. And then we made this move back up here. And this is where it stalled out. Now, this move up here retraced about 0.618, right up in here. See that number right there, 42.67. And we came down to where we broke, and now we have this little shallow little bounce. And we could go in again and apply a Fibonacci, and it bounced where it should have bounced. And it's once again, in just eyeballing this, at about 50% of this move down. We could map it. Let's go ahead and do it. We're going to get a few things on here. And Baga can do this. Baga used to do this for years and years and years. We don't do that much of it anymore, but because we don't have to. But let's just take this Fibonacci and get it right in here. Let's see if we can get a bead. So 50% retracement would be 4110. The 618 would be 4160. Right? So it's possible that we get up in there. It really is. The 38% retracement, which is normal, and if this market is as weak as I think it is, I don't think we're going to get a 50 or a 618 retracement. I'm thinking that we're maybe done. And if we're right here at 4060 is about the 38 retracement, I'm thinking that this little move is probably going to start to make another leg. And what I'm looking at, what I'm thinking is in the cards, and I'm not hearing this, is that this is likely to do what we had originally projected, that this is a major A, B, C to D leg down. That's what we think. And we don't think that this little bounce is much of anything against all of this. We think that this might just be a little bit of a bull trap. And if we are correct, where it might, and we drew these prices out a long time ago, if this is an A, now my little drawing tools are out of scale now, so I'll go ahead and erase them. Hope you don't mind. Let me erase those. But if we do break, and if this is an A to B to C to D leg down on a monthly basis, it would be normal if we had a normal extension to get down to 33.65. And I think, quite frankly, 29.96, 27.68 is entirely possible. Now, it's going to be critically important that if that scenario is in play, that we do not get any upside momentum here in the next few days. If we do, then it might be a little bit longer. But we still think that these numbers right in here are in play. We'll see. Now, we trade leverage products, futures products, intraday. We trade them long, we trade them short, we trade them aggressively, we trade them robotically, and we do so to create cash flow. We're trading as a business. So I don't have any vested interest per se to see this play out. If it's interesting, if it will, I would want to, ideally, if I was to structure a trade to take advantage of this, I would prefer to do it up in here. If I was to get the opportunity, I would want to be a seller and look for things to turn around again in play. If we get it over the next few days and we start, then I very well may try to express a bearish opinion, and I will do so not with futures, but I will do it with options, and I will define my risk. This type of move will take months to roll out. And Gracie is weighing in. She's a money cat, by the way, a calico. She's weighing in. So we'll see. I mean, this could be, these prices may not come into play until March. Save the video. I will. We'll see how it plays out. It'll be interesting. But I just want everyone to know this isn't what we're doing day in and day out, this exact sort of mapping. We let the machine do it. We trade around the machine signals to get done what we need to get done. But there's a lot of noise in the internet world right now that all our troubles are behind us and that we're going to be, making or breaking into new ground here very, very soon. Maybe. I'm a little suspect. We'll see how it plays out. Good luck, everybody.